Hello everyone, we are thrilled to have you join us today. Welcome back to Road to Ownership, your go-to source for all things real estate. Let's further our knowledge in real estate together and explore the exciting opportunities it offers. Today, our title is How to Recognize a Good Real Estate Investment. This is a crucial topic for anyone looking to succeed in the real estate market. Before we continue, please take a second and subscribe to this channel. Your support helps us bring you more valuable content. It will be greatly appreciated, and it ensures you won't miss any of our future videos. Real estate has long been touted as a path to financial freedom, and for good reason. It is a field where knowledge truly is power. It offers the potential for passive income, long-term appreciation, and tangible assets that can provide security and stability. But not all real estate investments are created equal. Some can lead to significant profits, while others might result in financial loss. In this video, we'll equip you with the knowledge to identify those golden opportunities that can make a real difference in your investment journey. We'll delve into the key factors that separate a good investment from a potential money pit, ensuring you make informed decisions. Get ready to take notes. This information could be the key to unlocking your financial future. By the end of this video, you'll be well on your way to making informed decisions and building a real estate portfolio that sets you on the road to financial success. We're excited to help you on this journey. They say, location, 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 for a reason. It's a mantra in the real estate world that underscores the critical importance of where a property is situated. A property's location is paramount to its investment potential. The right location can mean the difference between a property that appreciates in value and one that stagnates or even depreciates. Proximity to amenities like schools, parks, shopping centers, and transportation hubs significantly impacts desirability and therefore value. Families often prioritize good schools and parks, while young professionals might look for vibrant shopping centers and efficient public transport. A property in a desirable neighborhood with low crime rates and a strong sense of community will almost always appreciate faster and attract higher rents. Community events and well-lit streets contribute to a sense of safety and belonging, making these areas more attractive to potential buyers and renters. Think about it. Would you rather own a rental property in a bustling city center with easy access to jobs and entertainment, or a property in a remote area with limited amenities and a shrinking population? The vibrancy and opportunities of a city center can offer a more stable and lucrative investment. The choice is clear. Location is king. Whether you are buying, selling, or renting, the location of a property will always be a key factor in its success. So choose wisely and invest in the power of location. Just like the ocean, real estate markets ebb and flow. Understanding market trends is crucial for timing your investments and maximizing returns. Factors like interest rates, economic growth, and population demographics all play a role in shaping market cycles. For instance, coincidence when interest rates are low, borrowing money becomes cheaper, leading to increased demand for real estate and rising prices. Conversely, economic downturns can lead to decreased demand and falling prices. While location and market trends are crucial, never underestimate the importance of a property's physical condition. A thorough inspection is non-negotiable. It can reveal hidden problems that could cost you dearly down the line. Look for signs of structural damage, water leaks, mold, outdated electrical or plumbing systems, and any other red flags that could impact the property's value and your return on investment. Remember, a property in good condition will require fewer repairs and attract higher rents, leading to a smoother and more profitable investment experience. Section 5. Crunching the numbers, financial metrics. Now, let's dive into the numbers. Evaluating the financial viability of a real estate investment requires analyzing key metrics. These include the capitalization rate or cap rate, cash flow, cash on cash return, and debt service coverage ratio. A high cap rate indicates a strong potential for return on investment, while positive cash flow ensures you're earning more than you're spending on the property. Don't let these terms intimidate you. There are plenty of online resources and calculators to help you understand and analyze these metrics. Section 6. The 2008 Crash, a case study. To further illustrate the importance of these factors, let's rewind to the 2008 housing market crash. What caused this massive downturn? A combination of loose lending practices, speculation, and an oversupply of housing inventory. Many investors ignored fundamental principles, purchasing properties they could barely afford with the expectation of rapid appreciation. When the bubble burst, millions faced foreclosure and the market plummeted. This historical event serves as a stark reminder of the importance of due diligence, sound financial planning, and a long-term investment mindset. Section 7. The rise of remote work and real estate. Fast forward to recent years, and we've witnessed another major shift, the rise of remote work. This transformation has been driven by advancements in technology, making it easier for people to connect and collaborate from anywhere in the world. The COVID-19 pandemic accelerated this trend, with millions transitioning to working from home almost overnight. Companies quickly adapted to this new reality, investing in digital infrastructure and remote work tools. This shift has had a profound impact on real estate, as people now have greater flexibility in where they choose to live. No longer tied to a specific location for work, many have opted to move away from crowded urban centers. Demand for suburban and rural properties with more space and access to nature has surged as families seek a better quality of life. Larger homes with dedicated office spaces have become highly desirable. While some urban markets have experienced a slowdown, the overall landscape of real estate is evolving. Cities are rethinking their infrastructure and amenities to attract residents back. This trend highlights the dynamic nature of real estate and the importance of adapting to changing market conditions. Real estate professionals must stay informed and agile to meet the needs of a shifting population, ensuring they can provide the best options for their clients. Section 8. Conclusion. Your path to ownership. Recognizing a good real estate investment requires a multifaceted approach. By carefully considering location, market trends, property condition, and financial metrics, you can significantly increase your chances of success. Remember, real estate investment is a marathon, not a sprint. Patience, due diligence, and a long-term perspective are your allies in building a profitable and rewarding portfolio. Section 9. Call to action. One last thing. If there's a topic you would like us to cover, please add it in the comment section. Also, take a moment to share and like this video. Thank you.